Welcome to this week's episode of Frontier and Center. I'm Gene Munster. Our topic today, our focus company, is CrowdStrike. Before we jump into that, we always start by talking about the bigger picture in frontier tech. As a reminder, frontier tech is the concept of investing in technologies that will change our lives in 3 to 5 years. One way we can benchmark that is to look at how the Deepwater Frontier Tech ETF, ticker LOUP, is performing relative to the broader market. And year to date, it's up 15.5%. LOUP is relative to the NASDAQ, which is up just under 10%. And life to date, which is summer of 2018, LOUP is up 89%. So the takeaway there is that the market continues to view these frontier tech companies favorable relative to the opportunities, whether it be in AI, longevity, spatial computing, and robotics. And so we're going to drill deeper and talk about one of the portfolio companies, and that is CrowdStrike. This is a security company. It was founded in 2011 by George Kurtz. He was the former CTO of McAfee. Of course, we all know McAfee back in the day, the Norton McAfee kind of antivirus plays. And he saw an opportunity to create a company that approached that endpoint security, whether it's laptops or phones, endpoint security in a unique way. And what he wanted to do was make it so you didn't have to worry about updating your scanning your computer for viruses manually. He wanted a more dynamic, real-time solution that identifies threats and then does threat remediation and basically contains and gets rid of some of those threats. And so that was kind of the founding principles of CrowdStrike, again, founded in 2011. The company has grown a lot. It's now a $78 billion market cap, and it's had a great year. The past year, the stock is up 155%. And so that has been resonating is a broader macro related to more security threats out there, benefits companies like CrowdStrike. But what is unique about CrowdStrike is they are gaining share. And if you look at more recently in the December earnings, how CrowdStrike did relative to Palo Alto Networks. CrowdStrike had a good quarter. Palo Alto Networks, another well-regarded security company, had some challenges when they started talking about 2024. And so in the security space, it is not all rising tide lifts all boats. There is a point of distinction here, and CrowdStrike is making progress. And the reason is that their approach. I talked about that they started in the endpoint, but they've used that infrastructure, that architecture of getting software on devices, these agents on devices, and then selling different modules, basically different areas that you can protect, whether it's identity, you could have a data protecting endpoint devices, we talked about that, or network. They have over 20 different modules that you can protect, but each of those can be turned on through a software piece. That has two advantages versus other security companies which have some hardware or standalone pieces to their solution. And the advantages are that once that agent is installed, it's easy to upsell different modules, and separately the cost of that is relatively low. So in the case of CrowdStrike, they have margins that are high. Their gross margins are in the high 70% range. The operating margin currently is around 22%. And so at its most basic level, CrowdStrike is in the security space. They have used a unique approach to this by having an agent that can expand and cover other pieces. And by doing that, they are gaining share because there has been a shift in terms of how companies are protecting their data. Up until a few years ago, it was mostly best of breed. So these companies wanted to have the best solution, for example, the network, or the best solution for the endpoint. And now what they are moving to is best in breed. In the case of CrowdStrike is the ability, they do everything and bring it together. That ends up having a lower cost from a human perspective in terms of managing these systems. And separately is, since a single point is managing the systems, it ends up actually creating a more secure network and more secure endpoints. And so that has been resonating. CrowdStrike is gaining share. Where Palo Alto has been doing well, they have not been doing as well in terms of gaining share. And those two businesses, think about half of their businesses overlap in terms of revenue. So all this is from a fundamental perspective, things are going well, and is the reason why it is in the ETF is because we have a belief that there is going to be increased security threats, and a best-of-breed solution is going to, a platform is going to continue to gain share. There are some bear cases to the CrowdStrike, and one of them is related to competition. And in this case, it's mostly about Microsoft, and they have a free product, essentially. It does a lot of the same things that CrowdStrike does, but Microsoft's free product has had some challenges to it. They had a breach late last year related to some corporate emails, and that does not bode well for their brand, Microsoft's brand in security. And separately is their systems tend to take more humans to manage it. Therefore, the cost of ownership ends up being actually higher than what CrowdStrike is. And so free isn't actually free. There's no such thing as a free lunch in this case. And that is one of the reasons why CrowdStrike, despite this kind of continuing belief that Microsoft will end up being negative to their business, we have not seen that. The Microsoft piece does not concern us. The piece that does concern us relative to our ownership in CrowdStrike or having it as part of the ETF is the valuation. And when we originally initiated the position, it was trading at 9 times forward revenue. It's currently trading at 19 times. That equates to 82 times earnings. So I would put this in the category of a sky-high valuation. Now, they continue to deliver, so the fundamentals of the business are really good. But on the valuation perspective, this is something internally we talk a lot about. What that risk reward is now relative to a year ago has changed. So we currently believe that the business is in a position to continue to exceed expectations, and therefore the stock can continue to do well. But as we think about it as a holding within the ETF, there is that piece that we're conscious about what the valuation is, and we may be making changes relative to that based on valuation. And so that is CrowdStrike in a nutshell, and that's our latest episode of Frontier and Center. On behalf of Deepwater, bye for now.